So how low can the market drop? And the Domino's effect, how crazy it's going to get this time around. So that's exactly what we're going to address in this video. In order to answer the first question, it's quite simple. Let's draw some lines. Basically, here's your possible line where things are headed Monday. The reason I'm saying Monday, because it's the 22nd. So when the market opens up for trading Monday, coincidence or not, look at where RSI was right here. That was the lowest level on this chart in recent history, besides this 2-3 levels right here. So we're gonna highlight those. But RSI is at 49. Major bear divergence before we nailed right here. We pointed out this bear divergence. So we're on its way lower right now. The question is, should RSI stop right here? I think the answer is no. So let's draw this line right here. What was happening here? Whoa. Can this be fucking real? What is this? April 22nd. So when market's going to open up for trading, I'm recording this on Saturday and July 20th. Monday is going to be the 22nd of July. So is there a chance that RSI could actually revisit the level of 30? I think there's actually a high probability we could see RSI next week below 30, which has not happened in a very long fucking time. And that is why options are underpriced. So people are thinking, well, there's no way the market can fucking drop everything's so bullish. Okay, love it. Let the bulls think bullish. Let the dip buyers buy the dip. We're going to stick with the same strategy. Here at 30 Market Moves, we're going to short the bounces. So, basically, guys, I would to draw some lines right here. Let's draw another one right here. This was the trajectory. Let's make sure it's parallel. Okay, here's your answer. I think based on these lines right here, it is pretty safe to say, including some other factors in observation, not just based on those lines. But if we just go with these lines, right, we can easily see a market 105 to 120 points lower Monday, possibly Tuesday. It doesn't necessarily have to happen all in one place. But there's one distinction I want you to be paying close attention to. And last time RSI got to 30, look what MACD was doing. MACD was already rolling into a bullish crossover. Got exactly the opposite right now. So I don't think this situation right here where the market dipped from here to here is reflecting the current circumstances precisely. So I think there is a chance RSI could dip to the lowest part on this time frame as far as S&P 500, as far as NASDAQ, as far as, I'm using S&P as an example, but all other indexes are going to be synonymous to this. And I think the biggest drop is going to be the RTY, the Russell 2000, as far as futures concerned. So there's brewing a killer trade on that because the whole world is bullish on Russell 2000, Russell 1000, and keep telling you, oh, how the broadening is happening. There's no fucking broadening. There's no rotation. Okay, there's no signs of actual rotation besides a few days of some buying in Russell 2000. We'll glance at that in just a sec. So to finish this chart off right here, guys, similar bear diverse formations that resolved into this drop, resolved into this drop. I think this time, considering the setup of some other indicators, we could be going lower. So as most of the people think, okay, it's a good idea. So as you can see this green line, a lot of people think, a lot of institutional investors are like, hey, well, let's buy the dip just under that, because sometimes there's going to be an undershoot. But sometimes there's an undershoot going to the next fucking level. So conservatively speaking, yes, institutions are going to be targeting this blue line, which is the 52-week. But sometimes things can get out of control. So there is a chance over the course of the next 2 weeks, we could see S&P 500 down to 49.50. Okay, which is going to be this orange line. But I think clearly not Monday. Okay, but Monday we could easily see a move expansion of around 105 to 125 points, I would say. From the current close yesterday on July 19th. The reason being is normally if you study the history of the third week of expiration, basically the monthly options expiry, also known as a triple witching, right? Those in the last 2 years have never resolved into a day where the market is moving substantially. So that's why when we were trading yesterday, we're not expecting a huge crash. We're not expecting a huge collapse. And for those of you that are not aware of it, like third week of options expiration, the quad witching, triple witching, whatever, stay away from going big out of the money, right? So when you trade options, it's important. You could be right about direction, but it's important to be right about the strike price, because if you got the right direction but the wrong strike, you will lose money. So for that reason, it is important to understand by how much, not necessarily where the market is going overall, whether it's going higher or lower is not enough for you to make money as an options trader. You got to understand by how much, because it's understanding by how much something is moving is going to allow you to select the correct strike price. So considering we're looking at a range of 105 to 125 points Monday, now it doesn't mean it's just going to be like a straight shot lower, right? There is always, the markets never move in one straight shot lower. There's always bounces, there's always dips, there's always bounces, there's always dips. But overall, between the Friday close and now, we could be looking at anywhere from 105 to 125 points lower by Monday the 22nd. It's just interesting to highlight that the very fact that RSI is trading at 30 on April 22nd, 22nd coincides as the low of the last drop, consecutive multi-day red candles right here on the chart, as you can see. It could be matched here, but it does not necessarily mean that the market is going to stop here, guys. So that's the beautiful part, right? So we could be getting 105 to 125 point drop Monday, and after that, it doesn't mean the market is done. It doesn't mean that we cannot see a short-term bounce followed by a much bigger drop to the 49.50 level over the course of the next couple of weeks. And I'm making that judgment based on the 13 market move sequence. We had a lot of twos, but we've not had a big three move yet. So ultimately, I believe Monday is going to be a move three. Again, the fact that the market normally does not move on the monthly option expiration, which coincides with the third week of every month's trading, normally you would see a move expansion. What I mean by a move expansion, you would see the market travel to a certain direction by a much greater magnitude of a point drop than on the actual Friday. So basically what I'm saying, Friday we had a 40-point drop in the market, okay, 39 points, 0.59. We could easily see double or triple that on Monday. So at a minimum, we're looking at 80 points. At a maximum, probably 120, 125 points, considering the lines and all the shit I've just shown you here. With that said, let's take a look at some other charts, because it is important to understand the Domino's effect. So the domino effect began with the chart of Bitcoin rolling over from 72.5 all the way down to 53,000. Right now it's bouncing. We've identified a level of 65.5s we're shorted. We're adding to the short, and guess, guys, what? If it hits 72,000, we're going to short it. The probability of that is very unlikely, but it is within the parameters of a highly bearish pattern, which is known as the tornado pattern, which the only place you would hear about it is 13 market moves. So, guys, you can never take just one sign into consideration for putting some big fucking positions on. But there's many, many bear signs right now, while the whole world is so bullish on crypto, that is causing us to believe that there is going to be a great, great reversal. And as most of the people identified this recent level of 53,000 as the level beyond which, really, I mean, who can see it drop lower? Well, again, you got to come to 13 market moves, because we believe, well, of course, next few weeks, Bitcoin can easily trade down to this level right here of 42,500. Oh, shit. Okay, so the first domino rolls over is Bitcoin, and it is currently going up on diminishing volume in relation to the recent sell-off. That is not a bullish fucking thing, no matter what you hear about in the news. They're all fucking wrong. Now, the next thing we're going to look at is what happened next. Oh, shit. What happened next? Well, let's take a look at NASDAQ briefly, and then we're going to take a look at the composition of NASDAQ. Basically, okay, what happened? So this happens when? This happens just a few days after Bitcoin decides to roll lower. So if we go back to our historic analog of 2017, 2018, Bitcoin collapses from 20,000 to 12,000, exactly 30, 35 days later, the market collapses by about 18 to 21%, depending on the index that you're looking at. It's the same thing, guys. Okay, so first Bitcoin rolls over, then technology stocks roll over, and then if we were to watch the dominoes fall further, okay, we're going to take a look at gold, which most of the time people are confused about gold. They think when the markets drop, gold is supposed to be going higher. It is actually absolutely untrue. If you look back in the recent history, when during the COVID crash, you can do the COVID timeframe comparison for gold and S&P 500, and that's what you're going to see is exactly the opposite of the general belief, and that is gold will absolutely fucking drop if S&P 500 drops, and that is exactly how we're able to catch by identifying this variation of a tornado pattern on gold. We shorted gold at 2480, caught this beautiful 80-point move to the downside, and we still believe there's more downside out there because the sell-off is in pretty decent volume, so if it was just a normal pullback, if it was not a failed attempt to rally to all-time highs, okay, when gold was reaching out to all-time highs, the volume was dropping off in relation to the prior couple of days of buying. That is not a good sign. That was what you normally see in a bear formation, not in the bull formation. When we put in the context, the RSI formation right here, when gold was trading last time at around 2,400, RSI was almost at 90. Second time gold gets to close to that level, RSI is barely at 70. And guess where RSI is fucking now? It's under 70, and now it's at 52. So what am I saying? Well, I'm saying also pay attention to MACD, which is about to make a bearish hook, which is going to resolve into a death cross on MACD. At the same time, when these two lines can cross over as well, basically, what does this translate to? What does this equate to? It's a further drop in gold prices. So, and if you were trading with the 30 Market Moves coach last week and you missed the gold trade, what did we do? We gave you the oil trade and WTIC. Let's take a look at the chart of that. Basically, whoa. First you have Bitcoin drop, then you have NASDAQ drop, then you have gold drop, and now you have oil dropping. This is a serious case of domino after domino after domino falling the fuck out. And you've heard plenty of bullish videos from 13 Market Moves this year on the price of gold when it was trading down at 70, 72. We said, hey, by summertime, there is a chance this shit could break above 100, could go to even 150. Well, now, all these criteria, bullish criteria that we are observing, it did materialize in a move in gold above 90. But now these bullish criteria is played out. Considering, let's just put the two and two together. Okay, Trump. Okay, what does that mean? Number one rhetoric, Trump wants to put an end to all wars around the world, which is the reason why we predicted that, Trump was going to win for many reasons, but now it's apparent to everyone he's going to win. So basically, let's say that if you study the history, war equals higher gold prices, war equals higher oil prices. Now, what's the rhetoric now? What is the catalyst now for oil to move higher? You got Chinese demand dropping. You've got Trump, high probability of like 100% plus of fucking winning the election. Okay, so that means peace. Peace is bearish for gold. It's bearish for oil. All right, and yet it's still trading. Like when we shorted at 83, people thought we're like, whoa, how could you do? Yeah, because peace means short oil, short gold. All right, so when gold finally began dropping off, we said, well, the next thing that's going to drop off is oil. There it is. All right, and considering the day-to-day basis comparison on the volume of the oil chart, how does that look? Well, every day there's more and more sellers in oil at the critical level. While RSI is still at 39, it's still not at 30 level. Okay, so we still got some room further for a drop on oil. Our target actually is like 75. I know it seems a little aggressive for like a one-day drop, but there's been multiple days in recent history. Like look at this drop. That's a over 10% drop. This is an over 10% drop. This is over 10%. This is over like 13% drop. So there are days on which oil prices could move by more than 10%. So even if we were to just get a 6% move, we could be looking at a 75 oil at some point Monday. All of that is happening on the conditions of a bear death cross formation on MACD, which signifies that, MACD could still visit this levels. It could still visit this fucking levels over here, which means, whoa, shit, oil at 68. The question is how quick, right? So when you're trading options, the thing to look at is, it's not just whether something drops or goes higher. It's not just, as I explained early in the video, by how many points. The third ultimate thing you need to understand is within which time frame, which allows you to select the appropriate time frame. Now, most of the traders in options, what do? They're just like, well, fuck, Leo, I just go buy like fucking 1 year expiration. Yeah. And if oil drops, you're going to pay a shitload of premium for 1 year expirations. There is a chance, even if it drops, you're still not going to make any fucking money, depending on when you exit the trade. So it's understanding the direction, it's understanding the size of the move, and within which time frame that move can occur. So based on the current market conditions, oil can still drop to the downside in the next few days until it hits some of the recent levels and until we hit some of the levels here on RSI. Based on everything we're looking at and based on the rhetoric that the market seems to be missing at current market levels and conditions, I mean, I wouldn't be shocked if oil dropped to $45 in the next 6 months. But all kinds of things could be happening in the next 120 days. So you trade the current setup. You trade the current setup, guys. And the current setup is increasing volume, bear crossover. Key levels are being broken as we speak. And yeah, believe it or not, some people still didn't want to short oil at 83. Wow, that's the puzzle of my life, is figuring out why wouldn't somebody want to short oil at 83. In any case, the domino effect, to highlight it one more time, what do we have? Bitcoin lower, NASDAQ lower, S&P lower, you got gold lower and oil lower. To add to the Trump rhetoric of World War Peace, which is bearish for oil and gold, I would add the China data that's been coming out every month. It is weaker data. So Chinese oil demand is not looking good. And to reiterate the Trump rhetoric, drill, baby, drill. More oil supply while worldwide demand for oil is going down, and potentially wars coming up to a standstill here in not so distant future. That is not the market where you buy oil. That is not the market where you buy gold. All right, so with that said, now that you see the dominoes crumble, you're probably wondering, Leo, what is the next big fucking trade? Is it too late to short oil? Is it too late to short gold? Is it too late to short because some of you guys, you just can't pull the fucking trigger on something when it goes higher? And if you want to then answer to the next 50x trade, guys, I highly recommend just giving you some basic idea of what's happening in the market. But if you want to know the details, you go to 13mmtv.com. You schedule a coaching session with the coach here at 13 Market Moves. You go to 13marketmoves.com. You put in your information, get in touch with someone here, and basically sign up to trade with a coach. That's the quickest way to learn. That's the quickest way not to miss out on entries like 83 level on oil, like 2480. Where is this gold chart? Let's bring it back up. So 2480 level on gold when the rest of the world thinks, oh my God, it's going to all-time fucking highs. Not when you have such a severe bearish case on RSI. It's not when MACD is already showing signs of a death hook, and not when the volume is dying out at the very top. That is a bear, not a bull. So sometimes you'll see things break out. Sometimes you'll see things fail to break out, and it is the latter which is happening now. So clearly the next big level in gold would be 2368, 2300. Guys, there's some phenomenal trades to be made here, but if you fuck up your entry, you will lose. If you don't short the balances, you're at a disadvantage, and yet that's what 99% of the traders want to do. They want to buy puts when shit is dropping. Nobody wants to buy puts when gold is going higher. Nobody wants to buy puts when oil is going higher. Nobody wants to buy puts when. Well, let's take a look at this fucking chart talking about Domino's. ASML. We told you. I posted the video about it. I've traded it. Most of our coaches gave you this trade. All right. If you were signed up to trade with the coach here at 13 Market Moves, guys, we gave you the trade right fucking here. I posted the video explaining you the top information right here and the overwhelming presence of the selling volume at this level, which ultimately led to this drop. Now, you can reason and say, whoa, but it's because of this, it's because of that. Look, charts don't lie. Charts didn't know what news was going to hit. Okay, charts were telling you it's a fucking top. So trust the charts, stay with the fucking move. Okay, and that's how you would have caught a move from 1100 all the way to under 900, guys. That move gets you paid bigly, as Trump would say, on options. So if you missed that trade, if maybe you look, I know some of you were like, Leo, there's no way I'm buying fucking puts here. This is a semiconductor stock. This is another fucking Nvidia. It's gonna go higher. Okay, so those of you now are studying the 13 Market Moves course. We should have fucking done it way earlier. All right, guys. Look, Nvidia, a lot of bulls, fucking bulls all over the place. Let's take a look at the Nvidia chart. What is this? I've showed you in the last few videos. It's a fucking double top, all right? It's a double top, and most of the people are like, whoa, buy it at 117. 117 could still be a great area to short before the shit goes back to 90s. At 90s, maybe there is a short-term trade at 90s on calls there, but guys, stay the fuck. Don't buy the dip on this thing. Anyway, the market could always give you a short-term bounce, but the overall trend, while still everybody thinks it's a bull market, the overall trend is a bear. All right, so that's why when you're looking at all-time favorites of the last 440 days, let's take a look at SMCI. This is not a bullish chart, guys. This is another tornado pattern. So as we're looking for chart after chart after chart, whether it's Bitcoin or SMCI, we're noticing this bear formation pattern that we invented here at 13 Market Moves, and we named it the tornado pattern. Tornado pattern is extremely precise when it comes to trading Bitcoin and when it comes to trading technology stocks. So the fact that the tornado pattern is building up in both technology and crypto-related stocks and crypto-related names and Bitcoin and Ethereum itself is making us think that there's going to be a much grander move to the downside. But the question is, do you want to buy puts right now? Do you want to buy puts when the market opens up for trading Monday? And that is the question that you have to answer to yourself right now. Because if you short the market at the temporary low and it bounces, if you're trading weekly options, that is a huge loss. So to avoid those type of situations, 13mmtv.com, 13marketmoves.com. Don't waste your time, guys. Don't miss out on this huge move, but do nail the entry on that next huge move to the downside, guys. Short the bounces. Remember that. The strategy is simple, and dare to take your account to million plus the next 120 days. Let's go. I'll see you guys in the next video. And don't miss all the earnings plays we got coming up. It's a huge earnings week. Some earnings trades last week, guys. Shit, let me just bring that up. DPZ. Okay, that was a huge earnings trade. Who the fucking know? Whoa. And yet, guys, we gave you the fucking trade right here at the 480 level, 477 level before you woke up next fucking morning and you saw this shit 70, 80 points lower. So stop missing out on trades like this. Get in touch with 13 Market Moves, guys. Happy weekend and be ready to fucking trade Monday. Let's roll.